Hi everyone, I'm Brandon.
Hi guys, I'm Ricky, and today we're going to talk about some basic frequently asked questions that we get about Bitvice, the process, and Bitcoin in the general marketplace. So we've got, how many questions we have, Brandon? 8.
Yeah, I think we've got about 8 questions, so we're quite wide in topic. And we've had this from financial advisors, we've had this from direct investors. And I think all these answers to these questions fit to both. So the first one we really want to talk about is the regulation around Bitcoin. First of all, purchasing it. And secondly, about whether advisors can advise or assist their clients to purchase Bitcoin.
So this is a question specifically from the financial advisor side, right? Where they want to know how does the regulation work when I speak to my clients about Bitcoin?
Well, yeah, it's from advisors because first of all, it's completely legal to buy Bitcoin. Have been doing so for the last 6-7 years. It's legal across the world. But around financial advisors, look, they do fit within certain verticals of regulation when it comes to advising clients. And that's why with Bitvice, we make it very clear that it's not an advisory fee that an advisor gets when assisting a person to purchase and self-custody Bitcoin through Bitvice. It's a referral fee.
Yeah.
It's a referral fee because we see it that the investor and their advisor has made the decision to purchase Bitcoin. They will self-custody it themselves.
And they'll pay for the transaction themselves.
Yes.
So the key is here is that when an advisor makes a financial recommendation that is in the official ambit of his financial advice, it gets recorded in the record of advice, which he provides a client with after a financial advisory session has been made. So with the scope of what we do at Bitvice, it's a referral program. So it does not form part of your record of advice. So therefore, it's not financial advice in the official, eyes of the law, as it were.
Yeah.
So it's very important to make that distinction. Currently, as it stands, Bitcoin is in a gray area. It's not regulated, which means that you can still treat it as a referral system, the same way you would treat medical aid, for example. An advisor would say to his client, "You want medical aid? Let me put you in contact with someone." They facilitate the introduction to the medical aid practitioner, and they provide you with medical aid, and then they get a referral fee ongoing, and as long as that person keeps the medical aid policy in place. So we see Bitvice fitting in the same place. But also, it's important to note that all around the world, Bitcoin is entering legitimate financial markets, and it's going to be sold as legitimate financial products. ETF has already landed in Canada. There's an ETF on the way in the US. Europe already has an
very
ETF.
close in the US. There's definitely over a dozen submissions, especially from big boys like Citibank.
Yeah.
Who's going to win the race? I don't know, but as soon as that opens up, that's when pension funds.
That's when pension funds buy into it, right?
That's where the real money is.
And that's when every single financial advisor in the US starts selling Bitcoin as a regulated product.
But going back to South African individuals, just the most important point to put across is why should advisors be in the first place in this process of purchasing Bitcoin? Is that Bitvice implores the investors actually that we have to have whoever purchases Bitcoin through Bitvice have a wallet of their own, have an address ready to receive their Bitcoin. You can't make an order. At that point, it means when you receive it, you're self-custodying it. It's not on an exchange somewhere where you bought it on. Everybody knows the big Bitcoin exchanges in South Africa. They're holding those private keys of Bitcoin on your behalf. It's not the case there. You receive it. Yeah, and there's a lot of processes there.
We don't hold your Bitcoin. Right?
No.
It's very important for people to know. We send the Bitcoin when you purchase directly to your own self-custody.
Yeah. So it's about helping. So an advisor were to help an investor set that wallet up, making sure they know how to self-custody it, making sure they know how to back up the private keys in case they lose whatever wallet, so they can restore it down the line. And the most important thing is how do you manage this asset going forward in your estate? What happens to you if something, if you pass away? How do you get it to your loved ones? Those kind of intricacies are so important.
Yeah.
And that's where we come in to educate financial advisors so they can then reach their investors and help them allocate this property to their portfolio securely.
So just on a personal note, so I used to be a financial advisor myself, and this is during 2017, 2018, and I spoke to all of my clients about Bitcoin. Some of them purchased Bitcoin. Those that did purchase Bitcoin and kept it are extremely, extremely happy with the decision they made. And I like to think that I introduced it to them, or at least spoke to them about it in a way that they understand, and so they know it's not a scam, it's not a pyramid scheme, and all the other things that a lot of advisors say because they're just not knowledgeable about Bitcoin, because there's no financial incentive for them to be. But on a practical level, the way that an individual thinks about a financial advisor is that this is my go-to guy on all things investment and financial. And like Bitcoin falls into that scope, whether the regulation says that or not, that is the reality of the situation. So an individual expects that his advisor is going to be educated on it and is going to be able to help him, at least give him advice on it. That's why it's called a financial advisor. You know, you're advising your clients on it. So if advisors are not educating themselves on Bitcoin, they're putting themselves at a significant disadvantage, and even more, which I think is worse, is they're disadvantaging their clients. In an environment where trying to find yield in the South African landscape is really difficult. And Bitcoin's been the best performing asset of the decade. But why would you not? You do your clients a disservice by not giving them some exposure.
And it's also been great to help direct investors as well to make them understand how to sell custody, how to secure it. We've actually got a lot of experienced Bitcoiners purchasing through Bitvice because they immediately receive it. They don't have to. You make the order on the exchange, you got that, and then you got your Bitcoin on the exchange, and then you have to withdraw it from the exchange where there's all these different kinds of fees. Just buy it, receive it directly to where you want it to be, and then you can do with it whatever you want. So, and then moving on to the next point, we've had a lot of questions about, first of all, they're scared of the volatility of Bitcoin. Why is Bitcoin volatile? And I think with that, what is actually the underlying value of Bitcoin?
Well, like the first thing is that an asset cannot go from 0 to 60,000 without volatility. Like you can't have massive growth without volatility. Those two things just don't work together. If you want big returns, you have to have volatility. And this is why, position sizing is so important. And this is where your financial advisor is crucial, because he sits with you and works out what is your actual risk appetite. Can you take a 5% position? Can you take a 10% position? Can you take a 1% position? Or maybe you can take a 50% position. Like it all depends on your personal situation. And your advisor is one who's educated on how to actually work this stuff out. And then volatility doesn't really matter if you position size accordingly.
Yeah. So, I mean, you showed me some graphs the other day. If you just allocated 5% to your portfolio and say 95% of the rest was just the JSE top 40 over a 3-year period, it was something like a 35% increase, just a 5% allocation in your total portfolio. It would have increased by 35% if it was just 100% in JSE top 40.
Yeah, I'll put the charts in the link below in the comment section so you guys can have a look at the charts. But just adding a small percentage of Bitcoin to your portfolio doesn't increase your volatility significantly, but it increases your upside massively.
And you've got to think of Bitcoin as a long-term investment. I've myself have been buying for 6-7 years. I've held. I don't trade. I don't buy altcoins. I don't keep trying to buy the highs and lows. I dollar cost average as much as possible to just keep putting little chunks away into my self-custody cold storage.
But it didn't start like that, right?
No, it does. I mean, that's a road like everybody needs to take, and I don't think we want to go down there. Like, I think people are interested in the other cryptocurrencies and the trading and all that, but just be aware that 99% of you will make less.
You'll lose
than if you just hold Bitcoin.
And let's like we dip into a personal story on this. Like both of us obviously have been in for quite a while, and we have both bought altcoins and tried to trade altcoins, and both of us have lost out on it. And if I look at my opportunity cost from buying altcoins over the long term, some of the altcoins I still hold are worth nowhere near as much if I just had kept the Bitcoin. And this is why we keep hammering on about it. Like altcoins in the short term are hyper volatile and they give big returns, and people think over like a 12-month period, they look at a chart and they think, okay, this is way outperforming Bitcoin. Just zoom out, lengthen your time horizon, look at it over a 5-year term minimum, and you'll see all of a sudden Bitcoin destroys everything. It's the best place to put your money. So the volatility is your friend in the long term, because that's how you get upside.
I see volatility as a very good thing. It means it's still in the price discovery phase of this adoption curve.
It means you're still early.
So it started off in 2009. There was one node that connected to it via Healthfini, and it continued just from nothing
to over 100,000 nodes now.
Yeah, and its price kept increasing exponentially. It went to $1, then it went to 100 and 1,000, and then $20,000, then down to $3,000, then now it's back up to $60,000. Along this adoption curve was the early adopters, the smart money, the stupid money that came in 2017, and now you're seeing the institutional adoption. And there's still massive price discovery happening, which means there's a lot more upside, or the potential upside, because nothing in the world is certain.
Yeah.
And that's why volatility is a good bet on Bitcoin. So
Yeah.
the next question is, where is Bitcoin's price going?
Up. Just embrace the volatility, live in the volatility, be molded by it, be bane of volatility. You've got to it comes with the territory. And position size accordingly. And then it doesn't matter that much.
Yeah, so there's a lot of podcasts and a lot of articles about where everybody thinks the price is going. The highest I've heard about was from Raoul Paul and Real Vision, saying there could be a price target of $1.2 million per Bitcoin by the end of this cycle. The end of this cycle could be between end of this year and the middle next year. And the cycle means the bull cycle before it goes towards its next bear cycle, like we saw beginning of 2018 to basically
beginning of 2020.
But I think of it was up to the halving last year, May 2020. People could say it was in March last year, when there was that massive 50% drop. That was
the bottom, right?
Beautiful thing to witness.
Also a beautiful buying opportunity, which we both exploited.
Yeah. And then, there's more realistic targets. So you can look at an anonymous person called Plan B. He's got a stock to flow model, and it's just showing the amount of Bitcoin that'll come in. That's the supply over time, because everybody actually knows how much Bitcoin will come over time through supply, because it's actually fixed into the algorithm. Based on that, what stock there's going to be. So that's what the flow and the stock. And so that model shows by the end of this year about $288,000 on average for Bitcoin. So that's a cluster of modeling of prices in the model. In 2017,
not the high. That's more like the average price, right?
Yeah. So in 2017, the cluster was, correct me if I'm wrong, I think it was between $6,000 and $10,000.
Yeah. And it blew up to 20.
And it blew up to 20. So you've got some big institutions, billion dollar hedge funds in America, such as Guggenheim, saying, okay, they think there's a $600,000 target. There's Citibank, who's calling $300,000.
Yeah.
So you can see there's quite a wide variance. So the safe bet from our side is at $288,000 to $300,000. That's 500% increase from there, which is you don't get that anywhere in the world.
No.
So that's why volatility, upside, and price discovery are all beautiful inherent characteristics of Bitcoin.
But if you want a 500% upside, you better prepare yourself for a 60% downside. That's why the two go hand in hand. So you need to be able to deal with that. You need to have diamond hands. And this is why it's so important also that you hold your Bitcoin on a hardware wallet. Because if it's just kept on an exchange, it's one click away if you just sell your Bitcoin and, panic sell, you see the price dropping. Yeah. Whereas if it's on a hardware wallet, it's much easier just to be like, okay, I'm just going to relax, not going to send it to an exchange, let it do its thing. And it trends upwards over time. And that's specifically why we cater towards the direct investors we cater towards are the more seasoned, like Bitcoin maxi, like seasoned hodlers who know that not your keys, not your coins, and self-custody is the route to go. So those are the kind of guys who hold for the long term. And you just buy Bitcoin when people are selling and there's blood in the streets. And that's the kind of mindset you have to develop in Bitcoin. It might take a full cycle, 4 years for you to get there. Or you could learn from people like us who've been through this and experienced this ourselves and made the mistakes that you don't have to, It's very simple. It's actually it sounds too simple to work, but really all you need to do is just take a 10-year view, hold your Bitcoin for 10 years and don't sell.
Yeah, and then the next question has been, does Bitvice sell altcoins such as Ethereum and Cardano? And there's I think it's what 7,000 to 10,000 others. You can't keep up anymore.
Yeah, no, but what's the ones people always ask about the most? Ethereum, Cardano, Polkadot, flavor of the week altcoins.
Yeah, it's just different ones because there's so many.
The answer is no.
So I mean, like the question is, if they're cheaper. So Ethereum is what, $2,000 now? I don't know. I don't track it, but why? If it's that, then there's so much more upside there because Bitcoins are $60,000.
So there's a thing called unit bias. So people look at Bitcoin's price and they see $60,000. Okay, but now I don't want to buy Bitcoin because it's $60,000. It's really expensive. So they rather buy Bitcoin Cash or Bitcoin ABC or Bitcoin SV or whatever, because it's, $300 or whatever the price is. It's a lot cheaper. The thing is, you need to break. Bitcoin has got 8 zeros past the decimal, right? So it's 100 million Satoshis in one Bitcoin. So you need to price Bitcoin in Satoshis. What's the price per Satoshi? And then compare that to 8 decimals on Ethereum or Cardano or any of these altcoins. And you'll see all of a sudden that the unit is not actually that much different. But what you really want to look at is the upside appreciation over the long term. So you can buy fractions of a Bitcoin, buy them in Satoshi level, and then you don't fool yourself with like this unit bias. Excuse me, this unit bias where you think Bitcoin is really expensive. Yeah. Yes, it is. It has gone up a lot. That doesn't mean it's expensive. It just means there's a lot of value there, and a lot of people believe it's got a lot of value.
Yeah.
But break it down to the Satoshi level, and you can buy, small amounts. We at Bitvice do lump sum purchases, so you're obviously limited to a minimum of 20,000. We hope to address that in the future with recurring buys, where you can bring those numbers down a bit.
Yeah.
But ultimately, forget about the others. They're not going to give you those same returns, and really, they are very expensive when you actually price them in Bitcoin terms. You see them all going to zero.
I used to work at an investment firm that only looks at the underlying value and therefore the fundamentals of what they're investing in. It's the same way I think about Bitcoin and altcoins, and how I actually believe I protect family and friends from avoiding alternative cryptocurrencies. Just say, what are these cryptocurrencies trying to do? 5,000 of them are trying to do millions of transactions per second, and the other 5,000 are trying to do some crazy thing called smart contracts, which are actually simplistic in nature. And you got to understand the way that Bitcoin first started is that it's been very slow. The amount of transactions happening per second, it's like 13 kilobytes per second.
No, that's 7 transactions per second in reality.
Yeah, that's what it can handle. I mean, that's slower than what we're seeing internet. Remember those modems are 64 kilobytes per second. Okay, so that's a problem, right? But you got to think of Bitcoin that it's slow, and because of that, it is extremely secure. And I'm not going to dive into why. I just need to say that Bitcoin's never been hacked or defrauded. So we can assume after 12 years it's extremely secure.
Slow and steady wins the race, right?
All the developers on this open source network and the code have developed to say, okay, we're just going to focus on the security. And now they've built a second layer called Lightning Network over the last 3 years, which is doing incredible things now. These can do millions of transactions per second. That's what now for other 5,000 cryptocurrencies on extremely centralized, less secure networks, now redundant.
Absolutely.
The other 5,000 cryptocurrencies with smart contracts, you've got this Lightning Network itself can initiate smart contracts based on specific functions or terms, such as time or this specific condition, send money from A to B without any lawyer or person in the middle. That's a smart contract. Now they've even got a third layer above that to do more complex contracts. So you got to understand, do you want to bet on people who thought about things properly, building solid foundations and then doing things consistently and slowly and methodically? Or do you want to go with all these other things with massive marketing schemes and just centralized crap?
The thing at the end of the day, like Bitcoin's trying to be money, right? And when it comes to money, you want your money to be as unchanging as possible. You want it to be as conservative. You want it to stay the same, because that's how money retains its value. Because money is just a faith-based thing, right? If all of us believe that our money will retain its value, then money retains its value because people aren't selling it. But if you are building a monetary network on top of a protocol that is ever changing, the founding team or the software developers can exert control over that network, and they can change the rules as they see fit, as we see happening with a bunch of altcoins. That's a really, really bad platform type of money to use, because I don't know that tomorrow it's still going to be worth the same thing. And this is why Bitcoin is so conservative and it's so hard to change. It requires 95% consensus from all the nodes to change anything in Bitcoin, which means it's almost impossible to change because people can't agree on anything.
Yeah.
So it means that you can, with a very, very high degree of certainty, know that it's not going to change. And this is why it's slow. But it's slow on the settlement layer. So when you compare it on the settlement layer, you mustn't compare it to Visa and MasterCard, because those are transaction processing. This is not settlement. Settlement happens between central banks. And to settle money between central banks, actually, in reality, it would be them sending gold to each other because they all keep gold.
Yeah.
To send gold doesn't take 10 minutes. We're talking weeks to months to settle gold, and it's extremely expensive and it's very risky. So Bitcoin is actually really fast then in terms of settlement to get final settlement. It's a bearer asset that if I hold it, that's proof that it belongs to me. So we can't compare it to MasterCard and Visa. We need to compare the Lightning Network, the second layer on top of, just like Visa and MasterCard are layers on top of the primary settlement layer of fiat money. Lightning is a second layer on top of the settlement layer of Bitcoin. And so that's the correct way to think about it and evaluate it.
Yeah, and it's that important point of that 21 million total Bitcoins can never be changed. Ethereum got hacked in 2016 and decided to roll back their blockchain to just say, okay, that hack never happened. Now, what's the point of a cryptocurrency and a decentralized network if some central authority can just actually action that? Bitcoin can never happen, and that's why looping back to the price discovery. If you got that supply that can never be changed, and you've got this increase in demand that is exponentially increasing every single cycle, every single year. I mean, just put 2 and 2 together of like where this price can actually go.
I mean, if you and I were sitting having this conversation 5 years ago, and we said Bitcoin's going to be $60,000 in 2021, I mean, we would have sold everything we own to buy Bitcoin. We probably still wouldn't have believed it. And yet here we are, like it's surpassed everyone's wildest dreams. Anyway, next, should we move on to the next one?
Yeah, so common questions is about, how do you set up your own wallet to receive your Bitcoin, and actually why is self-custodying your Bitcoin so important?
Yeah, because I can keep my Bitcoin on an exchange, right?
Yeah.
Like the exchanges in South Africa, there's a couple of big ones that haven't been hacked. They've got good security protocols. What's wrong with leaving my Bitcoin there?
Yeah. So first of all, just setting up your wallet, what we've actually found with a lot of our clients is that it's best to download your own self-custody wallet to your mobile device, whether it's iPhone, iOS, or some Samsung or any Android phone. The most common wallet we suggest is called Blue Wallet, the color blue wallet, and that's on both app stores. This is such an easy to use and easy to understand way to generate your own Bitcoin address. And then it'll ask you to please save 12 words somewhere written on paper. Don't ever type it on your computer. Write on a piece of paper and hide that. That's the way that you can access that wallet if you ever to lose your phone. That's free to use, it's free to set up, and it automatically shows you your Bitcoin address, which then you can share on your Bitvice dashboard before you make an order. That Bitcoin, after you've made that order, is automatically sent to that address that you confirmed.
Okay, but now this sounds like a mission, right? Because why can't Bitvice just keep the Bitcoin for us, right?
Yeah.
So this is a very, very important concept to understand. It's not your keys, not your coins. If you are leaving your private keys, in other words, your Bitcoin, private keys, what controls your Bitcoin? If you're leaving that with a custodian on an exchange, that is not your Bitcoin. That's an IOU to Bitcoin. You don't know what could happen tomorrow. There could be a random act of God. There could be a hack. There could be government regulation that freezes the exchange. There could just be a targeted attack by a regulatory authority at you specifically to shut down your accounts on an exchange.
Yeah, going back to that point you just made about a regulatory authority locking your accounts. That's what just happened in Nigeria last month, in February.
Yeah,
they central bank banned it overnight, and that ban lasted for 2 weeks because they know you can't ban Bitcoin. But the exchanges there, and the biggest exchanges in Africa were actually working there. They told everybody they had a certain amount of time and your accounts are going to be locked. Now imagine if you're going camping in the Cedarburg for 5 days and you've got this communication.
Yeah.
So technically, if they can lock it,
this sounds like a very particular situation you're describing here, right?
No, so I never keep my money on Bitcoin on exchanges.
You just found out about it when you came back from Cedarburg.
It's the same thing as if Bitcoin was built to be the antithesis of a bank. It's supposed to be self-sovereign in nature, and that means that you're supposed to hold it for yourself, and it doesn't need any intermediary or bank whatsoever to send your Bitcoin to anybody you want.
Yes.
Now, if you're keeping it in an account that someone else can lock,
you're defeating the point of Bitcoin.
Exactly. So that's why 75% of all Bitcoin, so 75% out of 18 point something million Bitcoin in supply right now, 75% of that is self-custody.
And
On
that's
cold storage, not on an exchange.
and that's increased massively this year over the
Big
last year.
time.
Because people have realized we see regulation coming from certain draconian governments, and it will happen. They will freeze accounts. Financial repression is coming because the financial system is not just going to take Bitcoin lying down, because it is a direct threat to banks essentially and governments all over the world. Because what you must understand about Bitcoin is it's a deflationary currency, right? So what it means is that you can't print new money out of thin air with Bitcoin. So if governments are forced onto a Bitcoin standard, they can no longer inflate the currency. They can't print money for political pet projects and paying off these certain public special interest groups and voter groups. They can't do that anymore. They can't wage unnecessary wars. They can't do all of this stuff. They don't like this because it limits their power, right?
Yeah.
So if you keep your Bitcoin on an exchange, the first place the government is going to come if they start cracking down on Bitcoin is to that exchange.
Yeah.
So don't keep your Bitcoin on an exchange. Don't be a sucker. Take responsibility. It is an asset that requires extreme responsibility and extreme ownership. Like you have to take ownership of it. So you've got to figure out how you use passphrases, how you store your Bitcoin, how do you use a multi-sig. And this is exactly why Bitvice exists, to explain to people how do you take self-custody in the correct manner so that you and future generations can still maintain access to that Bitcoin, because if you pass away tomorrow and you've got a couple of Bitcoins stashed away and no one in your family knows how to access that, what was the point? Your family doesn't benefit from it. And this is where the financial advisor plays such a key role.
Absolutely. So like going back to, okay, you say you set up Blue Wallet, which is free on your mobile, you receive a Bitcoin. That is self-custody. You got it on that address and you've saved your 12 words to access it somewhere very safe. Probably you should be kept separate to where you live. That's what normally people do. The next step that we've seen with clientele is they go, okay, what's this hardware wallet all about? So it costs about 1,400 Rand for a Ledger Nano S. That's what I personally use. And that's where you can also keep your Bitcoin. It also generates an address for you, but now it's offline. It's not connected to the internet. It's holding your Bitcoin and it's a physical device. You still have passphrases as well that you save to access it, but now you can go lock that up somewhere.
So it's an order of magnitude more secure than a hot wallet you would have on your phone.
Exactly. And there's easier ways for you to explain to a very loved and trusted one how to access that if anything were to happen to you.
Yes.
We don't want to dive into multi-sig and all those things, but yes, financial advisors can play a role in different situations to make sure that your Bitcoin can be passed to someone that's a targeted beneficiary in the most trustless manner possible, meaning you haven't trusted any intermediary to try and automate the passing of that Bitcoin. There are ways, but it's quite complex, and that's where financial advisory services are going to be quite bespoke.
Yes,
I believe in the very near future. It's happening now.
Well, put it this way, right? So there's no point in having a money manager hold your Bitcoin for you to manage your Bitcoin, because all you have to do is hold it. There's no trading. Like if you're a asset manager and you're running a portfolio, there's a whole bunch of active trading that takes place between all the equities they hold in the portfolio in order to generate a yield. With Bitcoin, all you need to do is hold it. If it doesn't generate a yield, it just goes up in value. So if you keep your Bitcoin on an exchange, you're paying someone to hold that Bitcoin for you. So basically paying them a money management fee for something you could do yourself. However, there is scope and space for a trusted third party like a financial advisor to hold one key out of a multi-sig quorum. So let's say there's 3 keys to multi-sig, requires 2 to move any Bitcoin. Your financial advisor holds one of those keys. There is space to pay him an ongoing fee to hold that key for you in the event that if you lose one of your keys, he can sign for you. Or if you hit by a bus, your wife has one, you have one, he can sign one and she can get the Bitcoin.
But he can't touch it himself.
But he can't touch it because he only holds the one key. Yeah. So this is where multi-sig comes in, and it's orders of magnitude more secure than a hardware wallet now, because you have redundancy in one of your keys if you're using a 2 or 3 multi-sig, for example, where you can lose one of your keys, the other 2, you can still access your Bitcoin. And you can up that to a 3 or 5 or the 5 or 7. There's so many different ways of looking at it. And this is why, well, once again, where Bitvice comes in. We educate financial advisors on this process and direct investors so that you can get your head around multi-sig and work out a solution that works for you, your business, your family, maybe your trust, or whatever situation you're sitting in. How do you hold your Bitcoin in the most secure way?
Yeah, so we have had to explain that part quite a lot. So if you do want to understand that more, just send us an email at contacts@bitvice.io, contact@bitvice.io. We'll be happy to answer that. And then one of the next, probably the most popular question is, okay, I've got my Bitcoin. How do I sell it now? Let's just say it reached $300,000 and you're happy with that target. And you go, okay, I need to go buy a nice big house now. How do I sell it?
Okay, so there's a couple of ways of doing this. The first one is you can just go to an exchange. You take your Bitcoin because you have it in your own custody. You have an exchange account. You send your Bitcoin there.
What
are
the most common exchanges?
Okay, so in South Africa, the biggest, most trusted one is Luno, and then Valor is the next biggest one. And
VALR.
Yeah, Valor. Then there's altcoin traders, one of the smaller ones. Binance has got a South African presence now as well. I know Ice3X just got liquidated the other day, so they're not around anymore.
Yeah, so probably stick with us four. So the biggest are Luno, Valor, and Binance, and that's where you can trade your Bitcoin. You send it there from your self-custody wallet. You say, I want to send my Bitcoin. You've set up an address at one of the exchanges. That'll be the receiving address. Your Bitcoin gets there. You say, I want to sell at this amount, this rand value, and you get your rands there. Then you withdraw your rands from the exchange to your linked bank account.
Yeah,
and that's how you get your money.
Bob's your uncle. That's the first way that most people know about. It's the cheapest and the most convenient.
Yeah.
If you want to go the private route, for whatever purpose.
Why would they go private though?
Because every person has a right to privacy.
Okay, but why the exchanges private?
Because exchanges are regulated by the Center for Financial Intelligence in South Africa, and they by default report to this center. So you should just assume that the government knows what you're doing with Bitcoin when you're trading on an exchange. That means there's all kinds of implications. You do the math. But the second way you can go is the more private route. And I believe that every individual has a right to privacy. So for whatever the reason is, if you want to do it, it's none of my business. However, the way that we suggest you go is peer-to-peer trading. So there's a couple of platforms you can use. Hodl and Bisq are the two biggest ones at the moment. Bisq is great because it's completely decentralized.
BISQ.
Yeah. What you do in Bisq is there's people who are willing to trade cash for Bitcoin, and it goes through an escrow service, and you basically sell to a person on the street.
There's also local Bitcoins.
There's local Bitcoins too.
And that's not KYC.
It is. Right? It is. They've started doing KYC on local Bitcoins.
So all these are just, there's an escrow in between to make sure that both parties are happy with whatever transaction they're doing.
But it's peer-to-peer, which is important.
Peer-to-peer, yeah.
Then the third way of doing it is going to a Bitcoin ATM. So there's a couple of Bitcoin ATMs all around the country now. I say a couple, more than a couple. And it must be about 6 or 7 in the major cities. So for example, you go to the one in the foreshore in Cape Town, you scan your Bitcoin wallet address, well actually you scan their Bitcoin wallet address, you send your Bitcoin to the ATM and it spits out cash to you. Great, you get cash for your Bitcoin. Those are quite expensive. You've got somewhere between a 6 to 10% fee, but you do the math on what's important to you there, your privacy trade-offs. And then the last one, which is what we think is the best way of doing this, is take out a collateralized loan against your Bitcoin. There's services, none in South Africa yet. Hopefully there'll be here soon. But in America, there's platforms, and Hodl is the decentralized platform where you can do the same, where you basically take a collateralized loan against the Bitcoin that you own. So instead of having to sell it, you put it up as collateral, you get USD in exchange for that, and you pay an interest rate on that until you've paid off the loan, and then you get your Bitcoin back.
Why we would suggest that is it's basically a long position on Bitcoin. And the second most important thing, it doesn't trigger capital gains tax. If you were to go sell it for rand on an exchange, your capital gains is automatically triggered there. Bitvice does provide you a report for every order you put through and what your rand rate you bought at that Bitcoin at. So whatever you sell it at, that difference is your capital gains owed. In this case, because it's a loan,
you haven't disposed of the asset.
Exactly. So that's why it's quite an interesting one. There's a lot of great podcasts and reading material out there if you do want to know more. Yep. The biggest one what we know of in America is called BlockFi. I mean, they just raised $350 million at a $3.5 billion valuation. So it is becoming a more accepted form of, getting some dollars, becoming more liquid, and just reallocating your portfolio somewhat.
Let's just discuss like the scenario of how you would go about doing this. And so say, for example, I wish to purchase a house. So instead of selling my Bitcoin to buy to put down a deposit on the house, I take a collateralized loan against the Bitcoin I may already have, or I already have. So let's say I want to take out, I've got R1 million worth of Bitcoin, and I put that up in a loan. I get R1 million in USD. So now I pay whoever originated the loan to me. It's a decentralized, well, not in BlockFi's case, but in HODL case, it's a decentralized peer-to-peer marketplace. But I pay them back the interest rate on the capital. As the price of Bitcoin appreciates, I can take Bitcoin out of that escrow. So in other words, my debt is being inflated away as the price of Bitcoin goes up. I still get to keep my Bitcoin, and I get to take Bitcoin off the table as the price goes up. If the price goes down, I need to put more Bitcoin into the escrow. But what this means is that instead of having to go to a bank, take out a loan, and pay them back, I am using an asset I already have, and I'm basically taking a loan against myself. And if the asset goes up, I end up paying less, basically. If the asset goes down, it can work against you, obviously, but this is why you must position size your loan and take a responsible loan. But at the end of the day, you don't have to sell your Bitcoin. And after 10 years or however long the term is, you've got all your Bitcoin back, which is now, let's say, 10x over that time period. And you basically got a house for extremely cheap, and you never had to go to a bank. You didn't have to jump through any loops for mortgage applications, deal with the banks, pay the origination fees, pay all these clowns along the way who are taking money from you.
Yes, beautiful. You can see banks in America and all over the world now, and they are providing all these financial services around Bitcoin because it literally is the most pristine collateral on this planet.
It is the most liquid asset on earth. Yeah. You can sell Bitcoin in a millisecond on an exchange. If the order books on some of the big exchanges like Binance, for example, are so thick, they're massive. So if I need to go and offload, pick a number, if you need to offload 10 million rands worth of Bitcoin into those order books, they won't even blink. So it's pristine collateral for the person who's originating the loan. So let's say you want to earn an interest on USD that you might be holding, which if you're living in the US gives you get no interest rate at the bank. You can now give someone USD and have Bitcoin locked up as collateral for that loan. So if he gets margin called, you get the Bitcoin. You can sell it immediately and recoup your loan amount you gave out to him immediately. So the risk is extremely low because it's held in a collateralized escrow.
Exactly. So I think those are all the main questions we've got, and we'll do more of these learning sessions or webinars as we call them. But just a little plug, just email us at contact@bitvice.io if you have any questions. You also are more welcome to go to the site bitvice.io, select get started, say you're a beginner, who you are, if you're a direct investor or advisor, and say you're a beginner. And there's educational material and videos that show you exactly what you're going to go through. And
I mean, if it sounds, Bitcoin is complicated, right? Like it's a deep rabbit hole that you have to go down. And like I said earlier, it's a asset that requires extreme ownership. So if you're going to get into Bitcoin, you're going to have to, dip your toes and get into the literature and understand what this is about. And we've got all the tools there for you to educate yourself, and we'll handhold you along the way so you can, get to the position of Chad Bitcoin Maxi, like that's what we all want to be. But at the end of the day, it's about education and taking ownership for yourself. And not letting the banks run your life.
Great. Thanks very much, everyone.
Thanks, guys.
Looking forward to seeing you again.
Cheers.